Hello and welcome from Trend Signal for our review of the data and events the week beginning the 15th of September. Pretty important week this week, certainly if you live in the UK or indeed Scotland. In fact, a very big week, make no mistake. Nothing's priced in really with the Scottish referendum that happens on Thursday with the results out probably before the market opens on Friday this week. Markets are on a bit of a back foot first thing on Monday morning, following the pretty poor Chinese data over the weekend. Industrial production came in at 6.9% versus expectations of 8.8%, and that really is an appalling figure. Raises fear that China could experience a bit of a hard landing, and it's actually the worst industrial production data since 2008, which was, as we all know, when the financial crisis was kicking off. So equities last week had not a particularly good week. Most markets were down between 0.5% to 1.5%. Bond markets also headed south, with the Bund and the gilt falling sharply. The gilt probably more affected by the concern over a possible yes vote in the referendum this Thursday. But the Bund market, that's the core, the German sovereign debt, which is the sort of proxy euro bond, as it were, that fell as well. And I think global bond markets generally in retreat, but I think with the euro falling sharply against the dollar, there are not concerns necessarily, because I think inflation is what the Eurozone needs, but inflation will pick up as the euro depreciates against the dollar. And volatility coming back as well into the market. We're seeing this long-awaited rally in the dollar, and that's certainly kicking the market back into life a little bit. The dollar's gained quite a lot actually over the last 3 months, 5.5% against the euro now, 5% against the yen, that's reaching a 6-year high, and also 5.5% against sterling. And I think sterling, to a certain extent, has priced a little bit in the possibility of a yes vote, but in the event that there is a yes vote, I suspect sterling, along with gilts and the stock market, will fall quite sharply. Other things happening, well, gold and crude oil all particularly weak. On the back of the strong dollar last week, gold fell just under $40. Recovered a little bit this morning, but that's over 3%. Crude oil also fell $1.30. That's 1.4%. Again, recovering a little bit this morning, but significantly weaker oil. Rather surprising, bearing in mind the global macro events taking place at the moment, but the supply-demand equations are really the dominant force there, along with the dollar. Okay, let's have a look at what data and events are coming out this week. We've got a Japanese holiday on Monday, but the key events really, certainly for the sterling markets, are the referendum, which we've also already talked about, UK inflation data and the MPC minutes, and in the US we got the FOMC rate decision, which is one of the key events this week in the US. Let's have a quick look then. So Tuesday we have our inflation data in the UK. We fell from 1.9 to 1.6 the previous month. We're expecting a further decline to 1.5. And looking at the price of oil, it's not surprising that some of these inflation numbers are coming in below expectation, but certainly no worry there. German ZEW economic sentiment number published on Tuesday as well. Again, that number slipping as confidence really is starting to wane in the Eurozone's largest economy, and certainly with the news on the further sanctions by the European Union announced last Friday. I think, if anything, the sentiment will sour further in Germany. So that'll be some data to watch on Tuesday at 10 o'clock. Certainly will affect the euro currency and the bunds and DAX and Euro stocks. We then have next major event really is the minutes from the MPC meeting held early on in the month, and we had a couple of dissenters in the meeting the previous month, with 2 voting in favour of a rate rise. We don't expect to have any more dissenters, because the date, if anything, has softened a little bit, and with inflation certainly ticking down, I don't think there will be any rush for other members to join the 2 dissenters. but we expect those two dissenters to remain as dissenters. We have CPI data or inflation data in the US on Friday afternoon, but then the key event really, which is the FOMC, Federal Open Market Committee, and their deliberation on interest rates. No change in interest rates, but it really is the shift in the language as we approach the ending of quantitative easing next month in October, and it all sort of hangs on words as ever. So it's a shift in the Fed's language that markets will be looking at, and it's the words considerable time, which is their reference to maintaining rates near zero for a considerable time. If they remove that, then that's the cue that rates will be rising in the next 6 months, as I'm led to believe that the bond markets believe that considerable time tends to mean a period of at least 6 months. Odd, you may see, or you may think, but then the words mean a lot here. So 7 o'clock on Wednesday evening, those markets that are affected by that, all the dollar FX markets, obviously the bond treasury markets, and also the equity markets. So a big event, and we could wake up on Thursday morning with a bit of a move on our hands. If they do remove the considerable time, I suspect, reference, you will see the dollar rally further. Treasuries will probably come off, and I suspect equities will be mixed, altogether clear on their direction. And then on Thursday is the main event actually for the week as far as the UK is concerned, although it won't have any effect on the market. We have the Scottish independence vote, which the results of which we will have on Friday morning. So if anything, Friday is the day to sharpen your pencil. Expectations are that the no may well hold sway, but it is what they say is too close to call. There's a margin of error of 5% on these polls. So I think the likelihood is that it is too close to call, and the consequences of a yes vote are not factored into the market. So expect to see equities, sterling and bonds to fall if there is a yes vote. And then we finish on, actually on Thursday, we've got other data out as well. We've got retail sales in the UK, which will definitely be overshadowed by the referendum, of course. And Thursday afternoon, we got the Philly Fed manufacturing index for more sign of where the manufacturing sector in the US is going. Steady as she goes, I think, for now, although a little bit of a dip on that data from the previous month. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.